Welcome to F.A.C.E, Edward. How are you?
Good. Can you hear me?
Yeah, got you.
Excellent.
Nice to meet you.
Nice to see you again. Thanks for having me on. Appreciate
Oh,
it.
okay. So, see, I have Alzheimer's. When was the last time that I call it old timers? How long's it been, Ed?
I think it was December or November.
Okay. All right. So, Ed, remember how to share your screen here in Zoom?
Let me click share and then select a window. All right. Let me.
So I want to start off with something that you say on your Twitter account. Why an obsolete man?
That's recent due to all the censorship that's going on and the fact that in the political realm, using logic and critical thinking seems to be a problem. It's from the old Stone series. There's an episode called The Obsolete Man where Rod Serling said,
I saw the video. Yeah.
Logic is an enemy and truth is a menace. It's just the times we're in where you say
you feel stressed out about these times like everyone else. I'm still waiting for you to share your screen, Ed.
I just clicked it, so now I got to share it. Oh, there we go.
There you go.
Am I there?
It said, "Yep, got it." Okay. So looks like you're showing the S&P. So can you just refresh my memory and the attendees a little bit about your background and how you got in trading?
Yeah, so I started off my career as a bond salesman, but then moved into equity. I was a growth portfolio manager for about 10 years, BlackRock, and then tried to start my own hedge fund. That didn't work out, and I've been trading my own money for the 4 or 5 years. And I work closely with Peter Campbell at MCM. He and I are buddies, and he lets me use his software, and we analyze the S&P 100. And we traded aggressively, both long and short, swings, day trades.
Okay. All right.
So I'll talk about the S&P today, and what we're thinking. And obviously, we got a head and shoulders. It just looks like it's trying to break down. The measured move of this is 2830. Kind of got there last night in ES 2840. We broke.
You mean 3840?
Yeah, 38. Yeah, sorry.
Yeah. I mean, you are, I know you're bearish now because you're thinking of a different angle. But there are some people that think we could go there or to 3,000. But does this look just corrective to you?
Yeah, so
go ahead.
This is corrective, I think. I think there may be an important top coming, but I don't think just quite yet. I mean, we broke down 3870, which was the shelf that it needed to hold. If we break 3800, that will get my attention. If we break 3700, then something's changed. So Peter and I are thinking that this is going to catch, and then we're going to have, if you're a bear, unfortunately, another move probably over the next 3 weeks, pretty quick into like the 4,000, 4,100 area. And primarily that's going to be because, like you said, Powell's speaking today. He's going to be dovish. He's going to emphasize the fiscal aspect of this.
Right.
It looks like we're going to get a decision on that around March 14th. So that's another 3 weeks. So we're guessing the market front run that, and then it's a sell the news event. We'll let the markets handle that.
So you think we'll go back up into the fiscal COVID rescue plan?
Correct.
And that'll be buy the rumors, sell the fact.
Correct. And look, we all know the valuations are kooky. Blake talked about Tesla. Tesla broke its 50 PMA for the first time in months. It looks like a good break here, and it's got to follow through today. It broke it yesterday decisively, and it's breaking it again. It's getting some nice follow through today. It'll probably back test the 50 DMA in the subsequent rally we start to get in the next day or two, depending upon where we go. But
what do you make out of NASDAQ really out, it led on the way up, and the percentage declines have been much greater to the downside in the last week?
Yeah, I mean, look, the Nasdaq is telling you something's starting to gel. I think, we're gonna hear about economic recovery and rotation, and the market's gonna try to levitate on rotation. But we all know that most of the market cap is intact, and if those things really break down, the market's gonna struggle. I don't care if the Russell 1000, is hitting new highs. That's just not gonna be enough market cap eventually to levitate this. But the thing to remember is last year, as we all know, M1, the money supply, M1 grew 65% annualized basis year over year. And we've never seen that before. And that's why we are where we are today. Now, let's think about what's going to happen as we start rolling through the calendar year. The second derivative of that increase in the money supply is going to start to roll over. And that's why the Fed is emphasizing the fiscal aspect of this. And I've talked to a couple of hedge fund buddies that are really good at technical analysis, and they're getting worried about the second half of the year from a second derivative standpoint on the money supply and just economic growth starting to roll over from the COVID rebound.
Okay, so are you saying, Ed, in plain non-economist language, that the Fed with the second derivative is losing effectiveness, and that's why he's going hat in hand for fiscal stimulus, because the Fed feels like there's not much more they can do? What is the second derivative?
Correct. So basically, I mean, they just did 65% last year. To keep this thing floating, they need to do even, this is about flow. They need to keep the flow going of money supply. So what are they're going to do another 80% this year? No. So they're going hat in hand, like you said, to
Congress. Yeah.
And they need these guys to spend trillions of dollars. And if we get any kind of delay, or if it's mostly pork and it doesn't actually, get into the real economy, it's going to be a problem. It's going to be a problem.
Even if they do, let me ask you this: you're an old bond salesman. Yep. And I was actually correct about something, about rates rising since August, when we had the turn in the 10-year. And I'm wondering why, and maybe you could explain it to me, why treasuries like TLT and ETF for the 20-year almost retrace the whole move from when the Fed stepped in on the COVID crash, yet corporates and junk have not suffered hardly at all. They've come off a little bit, but I mean, you look at TLT, it's almost 78.6, 88.3 of the whole rally from the COVID crash. So why, if they are buying bonds, why have yields increased so much more in treasuries instead of junk and corporates? Do you know?
Well, look, I think it's got a lot to do with just technicals. We've had this 30-year decline in yields, and I think kind of hit, and especially the long end, right? I mean, the Fed. I think what it's indicating is that the market's sniffing out the Fed is losing control eventually, and the long end is going to be the first place to move. And given the political uncertainty that seems to be going on in our country, I think that's also playing into this. I mean, people look, if you talk to a lot of people outside of this country, they looked at the election and they smelled something weird going on. And so even though, it's people don't like to talk about the election, and there's a lot of censorship about talking about the election results, people in other countries can vote with their feet. And the Fed, unprecedented money supply, 65%. I think the market, the bond guys always smell stuff before the equity folks and
but they've been on retirement for 30 years, so they finally the bond vigilantes are finally reappearing. It's the second coming of them.
I don't know if you know how this works. It's like I think the bond vigilantes are dead. I think what's happening is
they're my age. They're my age. At least some of them are biting the dust. Yeah, I know.
What it usually happens is when you get the last bond vigilante to die or go away, you get a reversal. and it's just a natural thing where, you know, there's just no more buyers of long end treasury bonds, and you know, then they become net sellers. And I think that's where we are. I think it's the Federal Reserve last year with this COVID crisis and this, all the moves they made are so unprecedented in the political situation in the U.S. that has conspired to cause the long end to start to creep up. And, you know, that's always been my contention, that this whole equity bull market is in the credit markets. Eventually, the credit markets begin the end. And
okay.
And you know, when you have the reserve currency long end, the U.S. dollar reserve currency, our long end starts to creep up. That's going to eventually affect other asset classes, primarily the equity market. There's been,
yes, valuations compresses them. So let me ask you this: do you think the dollar is a sacrificial lamb here? I mean, there's so much it's hard for people to come up with a bullish narrative for the dollar. Can you?
Yeah, I've always believed that when this, if there is going to be an end to this kind of this madness, the dollar is actually going to pull people and have a huge rally. The dollar ends with an explosion up, and that's when we, you know, maybe have a different, you know, world currency. But it, you know, we in 2000 and 2008, the Federal Reserve flooded the world with dollars, and everybody borrowed dollars. So there's a huge amount of borrowing in dollars, and eventually, if there's a credit crisis and a true economic deterioration, the dollar is going to get called home, and that's going to cause the dollar to go up. Credit destruction actually causes the dollar to rise because we're the reserve currency. So we have some sort of solvency crisis or something along those lines. The dollar will sit out, and look, if you look at the dollar is like broke out of a trend line, a long-term trend line down from last year, and it's back testing it now. So
you have a picture of it?
Yeah, let me. Can I share? How do I share it?
Just you know, if the chart comes up on this screen, you just do it on this screen. If not, you know,
Let me move it over.
Huh?
Yeah, let me pull up my dollar chart.
Okay, that's our bailiwick. So, so you're saying we broke out of a downtrend with this last rally we had to like 91.40?
Yeah,
be
but
interesting to
now
see.
Now we're back testing the downtrend with this most recent rally. Can you see that now?
Yeah, got it, buddy. Okay.
Yeah, so you see, so from April of last year, we had a downtrend. We broke out of it at the beginning of February. Now we're kind of back testing that green line I've drawn.
Okay.
And so I think we'll chop around here, and we're trying to put in a low in the dollar. That's what I think.
This could be a higher low here with the whole world, you know, so bearish the dollar that, you know, I was thinking at least a bear market rally to 95, 96 was possible. Maybe it happens during this corrective phase in the S&Ps, but so far in the last couple of days with weakness in equities, we've seen really no bid in the dollar. Maybe today.
Yeah. So you look, the dollar, I think, is trying to put in I mean, the dollar has cycles to it, right? And you know, it's. I think the dollar goes on a 3-year cycle, and maybe it's trying to put in a 3-year cycle low, and then it'll try to. We'll see if that rally is, you know, a left translated, you know, bearish counter trend rally, or if it's a right translated. We won't know until we start to see it. But you know, if this is going to end, the dollar is going to explode. But you know, I've tried calling tops too many times a couple of years ago, so I just go along and trade what I see. But right now I see a top coming in 3 weeks, and we'll see how important of a top it is. And I know people want to get bearish right now, but I wouldn't get too bearish right here, right now. I think we might have a little more weakness today. We might scare people and try to take the S&P down to 3,800 or maybe into the 3,700s, but I think it'll catch and then rally. Okay.
So you and Peter are thinking 4,100 on this next rally, maybe into April. I know there are a lot of important cycles due in April.
That's what we think. But you know, look, we're also, you know,
flexible.
Yeah, we're flexible. And if we really break down 3,700, something else is up, and we're not going to be looking to get long. But I mean, right now, we were short a little bit the last couple days, but we're looking for a long here at some point.
Okay. Because I remember the last interview with Peter, he was looking for a high. I brought up April, and he said he didn't think it would. It had that much time in it. He was talking late January, early February, and but that was several months in advance.
Yeah.
And he was talking, I think 3850 for a number. When we were all, we were 36 or so when he was saying that, so it was a great call.
Yeah, he's moved his targets up as have I, and but we need to see a couple things before we get really bearish, and we haven't seen them yet. We need to see some, according to his sentiment work, some unconfirmed highs, which we haven't seen yet, and we need to see credit sentiment deteriorate, corporate credit. We haven't seen that yet, and we also need to see some Hindenburg omens, which we haven't had any of those yet. So we're thinking maybe into the middle of March, we'll see what the market looks like then, if it's higher.
Okay.
And so
around the spring equinox.
Yeah, an important top is coming, but you just don't want to front run it because
I know. I think we all know. How many you think I didn't try and short a lot of divergences that got blown out. So yeah, it's but I finally did nail the high last week. So I'm interested in your look. Anything else that you and Peter pay attention to on your own that you want to share with us today?
So let's also take a look at, let me grab the VIX.
Okay.
I
was thinking that, during this period that maybe we could rally. There's a gap up around 29.
Yeah. So I'm just looking at the VIX curve.
Okay.
The VIX futures term structure. And right now it's positively sloped. And you really don't want to get too bearish when it looks like this.
Why?
That's telling you that things are not stressed out with the market makers and the volatility. And I'll start to get really concerned if this VIX futures curve flattens out or inverts. I've caught some nice tops watching this, and whenever you get an inversion at a high or new all-time high, it's about to implode. And we don't have that yet, so we might see an inversion, in 3 or 4 weeks. But right now, this term structure suggests to me that any kind of dip here will get bought to new highs. And
okay, so the inversion, would that be
the March contract goes above,
like backwardation in futures, where the curve would show the front end being the strongest and the deferred being weaker? Is that what you're talking about?
That's what I'm talking about.
All right, that's like backwardation on commodity markets, where people will pay up for the front month and the back months are lower.
Yeah, and look, if you're looking, that's one of the tricks a lot of us use is if you're hitting new all-time highs and the VIX curve is getting flat and about to go into backwardation, something ominous is coming, and we don't have that yet. So this strikes me as just a garden variety mill pullback that'll get bought. I mean, I could be wrong, and if we invert in the next couple days, then something else is going on. But right now, this is a healthy looking term structure on the VIX.
Okay. I like your insights into the market very much, Ed, and I'm sure anyone listening to us or listens later to the recording would want to know how they could stay in touch with you and your opinions and your looks. Do you have a place where you would like to direct people?
Yeah, I'm on Twitter, and I talk to people that politely come into my DMs at Dowd Edward.
Right.
And, you should also follow my buddy Peter.
Yes. MCM.
at MCM_CT. He's got some great perspectives on the market, and he and I have been working together for about 2.5 years, and we've both learned together. We've learned to trust his tools more than our own opinions. I've become, as I'm sure this has happened to you too, Dale, with the central bank manipulation, you just trade what you see. Opinions are not worth that much. So,
yeah, and a lot of old things that used to work don't work. You know, I mean, when copper was in the bear market, the things like all bull markets are capped and roofed in copper. Well, it never really put on a roof, but it sure worked in the opposite way. So, you know what I mean, buddy?
Yep.
All right. Well, I amazing move in copper, amazing move in commodities. So, I guess you know, we're going to see, because most people are talking about the reflation trade. Do you think that you know, a lot of that has already occurred, or is still embryonic?
If I'm looking and Peter's looking, and we're on important topic, equities, that suggests that the reflation trade's already played out, and that reflation trade started last.
Yeah.
You know, there's two forces. I mean, the Fed's been fighting deflation since the great financial crisis, and
Right.
inflation trades over the last 10 years. And I'm guessing this is already priced in. I'm guessing the dollar is put in an important low. I'm guessing, you know, as Blake was saying, copper's going to put in a top. May not be the final top, but a top. And so, like, it seems to me we're reaching some sort of inflection point over the next 2 to 4 weeks where a lot of things are going to move around.
Okay, it's going to be an interesting period. And let me ask you this, Ed, when the vaccine is available to you, are you going to take it?
No, I don't take the flu shot. I'm in fabulous shape for a guy my age. You know, as I got older, I decided to take a hard look at my health, and I'm in the best shape of my life. And I think I've already been exposed to the virus, to be quite honest. I live on Maui, and a dirty little secret, the virus was here in the fall, and we didn't know it because everyone got sick on Maui in the fall. And then when we had the lockdown, no one got sick, even though we were exposed to 600,000 tourists between January and March. We really didn't have any cases, and it wasn't because of the lockdown. It was because it had already blown through Maui in the fall.
Okay, interesting. Well, thank you very much, my trading warrior brother. It was great to talk to you again. And you know, excuse me, I've done so many of these sometimes, and when time goes by, I don't remember. So you know, have mercy on someone, a senior citizen. Anyway, I appreciate
being on. Thank you for having me.
It was a great interview, Ed. Thanks so much for being with us today, and good hunting to you and Peter. Say hello for me.
Got it. Take care.
All right, everyone. Good luck the rest of Turnaround Tuesday. Remember, don't just count your pips, count your blessings. And you could tune in to Blake as a member for the bias chart in about 19 minutes. And I'll see everyone tomorrow. You're welcome, Brock. The people are thanking you, Ed. And I'm going to wrap it here. Adios, everyone. You're welcome, Hugo. See you, Warriors, tomorrow. Adios. You're welcome, Sonny.